So somebody asked me on Sunday what I do when I see stocks fall. And I gave my response on Sunday evening, but I thought I'd make this video to hopefully give you an insight into how I approach situations like what we find ourselves in right now. I do have to stress, though, that please do not copy what I share in this video. This is not financial advice. My approach is very much personal to me. I can almost guarantee you that what I do won't work for you because it is aligned to my goals. It is aligned to my plan. And if you don't have a goal and you don't have a plan, we'll talk about that a bit later on, you definitely need one. Let's have a look at where we are. So today is Monday, and most of the world's major indices are actually down. And interestingly, this week is earnings week. We've got some companies reporting their earnings. It will be very, very interesting to kind of track whether we see a response in the market due to the earnings reports that we all see from these companies later on throughout the week. But with that being said, with the markets being down and stocks being down, if you're investing with Trading 212, Stake, eToro, you'll be getting messages telling you that this stock is down 6%, this stock is down 7%. It can be really, really painful, particularly if you're only just starting to invest or you've just started to invest in the last 12 to 24 months. If you've been following YouTube and you've been using YouTube as a resource, you've probably come across a ton of videos here on YouTube which have just told you about how much money you can make. Not necessarily talking about how you can actually manage your downside risk and how you can protect your downside when things like this tend to happen. Now, unless you've been here before, this will be completely new to you. The only thing I can say to give you comfort is this won't last for long, or at least we hope that it doesn't last for long. The markets are cyclical, so we will come out of this. We'll find ourselves in this same situation at some point in the future. It's not a matter of if, it's a matter of when, but use this as an opportunity to gain some experience and learn some things, because it's going to serve you so much better and so well later on when we find ourselves in another market cycle just like this. So what do I actually do? So the first thing that I do when I find myself in situations like this is to try and understand what's going on in the environment where we are invested. When things like this happen, the first thing I want to know is this something that is maybe just a blip caused by something that isn't going to have a wider impact on the market? And the understanding of whether that is the case or not dictates what I then do. So let me just draw two parallels here, right? Let's talk about where we are right now. The reason why the markets are so volatile, the reason why the major indices are down right now is really down to inflation. It's down to the fact that we're at a 30-year high here in the UK at 5.4%. We haven't been at these levels since 1992. Energy caps are going to be released or come off in April, which means that inflation here in the UK is forecast to be at 7%. So not only are we seeing a squeeze on our disposable income, if you're lucky enough to have disposable income right now, your money isn't going as far as it used to 6 months ago. Energy is costing more. Gas, electric, to put fuel in your car, that's costing more. To buy food, that's costing more. And in April, with the energy caps coming off, those prices are about to go up. We are going to be paying more for things like our internet. BT has already announced that they're going to be increasing prices. I think it's by about 3.9% or something like that. So we're going to see prices increase. That's going to push up inflation beyond where it is right now. Now, it's a big deal because the Bank of England, which is our central bank here in the UK, their responsibility is to control inflation. And their target for inflation is 2%. We are more than double. We're almost approaching triple that inflation rate right now. So it means you have less disposable income. And from a retail investor's point of view, what that is likely to mean and what we see in terms of patterns is if day-to-day money is being constricted because things cost more, if you have money in the stock market, people are likely to pull it out. And that is even more so the case with the rise of retail investors over the last 24 to 36 months. Now, that's on the retail investing side, right? You think about the institutional side. So you think about professional investors, the big hedge funds, investment houses. They don't like what's going on right now because there is no certainty around what measures the Fed in the US in particular is going to pull in terms of interest rates. We already know that they're going to be tapering back things like QE, which is the money that was pumped into the market to keep things afloat when the pandemic hit. That's being tapered back at such an alarming rate. Combined with interest rates means that there is not a lot of confidence right now in the markets. There's a lot of uncertainty in the markets. Now, I say all of that to say this. Understanding the context of the environment is important because you can determine whether or not those factors are likely to have a lasting impact on the market. It's very, very different to where we were in March 2020, where the market took a dip because companies had no choice but to shut down because of COVID. There wasn't a systemic reason, and I use that word incorrectly. Systemic means that there's something wrong within the financial system itself. I don't think there's anything wrong specifically in the financial system itself, but I'm using the phrase systemic because inflation is the driving factor within this, and that impacts the financial system. So whilst the word systemic, the use of that is incorrect, I hope the sentiment actually comes through correctly. So COVID and where we were in March 2020 is very, very different to where we are right now. We know that there's an overarching problem. So when I see this and I understand what's going on, me understanding that inflation and the impact that this might have on the markets, combined with the fact that we have been dealing with overinflated asset prices and the fear that actually these prices are unsustainable, things coming down, things cooling off to a more sustainable level, seems about right for what we're seeing right now. Now, when we look at market crashes, the last time this happened, it took between 5 to 7 years roughly for the markets to recover. So when I approach this, I take a look at that backdrop and then I refer to the next thing on my list, which goes into my considerations, my plan and my goal. Now, I spoke about this a little bit in a video previously. I will signpost that at the end. Go and watch that video for full context, and hopefully you can identify a few things that will help you. But essentially, when you are investing, I always talk about this. What are you doing it for? Why are you investing? Have you got a clear goal? I have very, very clear goals. And personally, my circumstances are changing. My plan is informed by my goals. So my goal tells me what I invest in, how long I invest in that thing for, how I invest in that thing. Many of you will know I have a core satellite approach. Most of my money in index funds and ETFs, small amounts of money in the periphery in individual stocks. And I'll talk about that in a moment. But I will look at that in comparison to, right, has anything changed? And this is the big question. If you started to invest in the last 12 to 24 months and you have a clear goal and you have a clear plan, perfect. The next question you have to ask yourself, and this is the most important question, is, has anything changed? If something has changed, then you may consider changing your investment approach. This is what it looks like for me. Many of you who've been following me will know that it is on my agenda. It is my ambition to move out to Dubai. That is going to be happening in the next 24 months, a little bit less than that. So what I do know is within my personal circumstances, some of the money that I have invested at the moment for long term is going to be moved to this short-term goal. And it is a short-term goal because it's under 2 years. So with that money being moved into my short-term goal, it means that I have to reassess the level of risk that I'm taking with that money. And against the backdrop of where we are right now, what that essentially means is taking profits. In positions where I'm up quite a bit, like Tesla, for example, I am taking profits. In some cases, I'm taking money off the table altogether. That works for me because I know that I need money available in under 2 years in order to make this move happen. Now, the important thing here is to note that ultimately, we don't have any idea that when and if the markets recover, if we are truly in a market crash, a market correction, which many people have been talking about for such a long time. We know that the last one took 5 to 7 years. In my case, I don't have 5 to 7 years for the markets to recover for my short-term goal. So therefore, it makes sense for me to have a prudent approach to how I'm investing right now, revise my plans, revise my strategy, and pull money out and put it on the sidelines for my short-term goal. Now, that doesn't mean that you have to do exactly the same thing, but I'm just giving you context here in terms of how I'm actually thinking. Your job after watching this video is to essentially figure out what everything that I've just said means in your circumstances and try to make a decision that works for you based on those considerations, based on your own plan and based on your own goals. Now, if you haven't seen the video from last Friday and you want to know about how important goals, plans are, and if you've made any of the 4 investment mistakes that I spoke about last week, then you need to go and watch this video right here. You'll pick up a few things that should hopefully help you. But guys, look, I know that it is painful right now. I know that it is tough to look at your portfolio and essentially see red. I'm going to leave you one gem that I've said a number of times on this channel. A loss is only a loss on paper. If you're seeing red right now, it's not real until you cash it in. Same thing applies if you're seeing green all over the shop right now as well. If you're still holding profits, it's not real until you cash it in. So do with that nugget as you will. Catch you later on.